What's going on, everybody? Welcome back to another video coming to you guys live from Houston, Texas. Now, some of you guys might know that I've spent the last couple of weeks kind of moving from Trinidad and Tobago back to Houston. So have the new car, have the new apartment. And if you guys are interested in seeing a little bit more, as well as seeing my daily trades that I share with you guys on a daily basis, make sure to follow me on my Instagram so you guys can see a little bit more about that. You can see how much I like to say I'm gambling, but I think I know what I'm doing here. And we'll touch a little bit more about the options income as we kind of go through the portfolio. So obviously coming to you guys to talk to you about September's income, whether that is from options, whether that's from YouTube, Shopify, or any other income sources. Gonna lay it out for you guys. Basically everything that doesn't come from my 9 to 5, I lay out within here. So far, so good. Obviously, the big key points here is we made about $3,500 in terms of income coming from non-W2 sort of income sources. And then we had about $1,600 coming from dividends. We had about over $1,000, which is my best options income month to date. Then we had 300 bucks coming from YouTube and 400, just under 500 bucks coming from Shopify. So altogether, that comes just to 3,474 bucks, almost 3,500 bucks, which by far is my best month by a pretty significant margin. Actually, I think the next highest month here was June, which was about 2,800 bucks. Almost 2,900 bucks, so that beats it by just over 500 bucks there. So far looking so good compared to where we're at. I'm doing some trialing for some of the further months, so you won't be able to see the dividend growth kind of coming in for the upcoming months, but you can see that we're continuing to do some good options trading, continuing to have YouTube kind of in here, Shopify as well. So hopefully soon enough, as we continue to add capital to the portfolio, as we continue to hone in on our options strategy and also do well with YouTube and Shopify, hope to get up to that $4,000 mark and kind of keep that consistent as we kind of go forward. Hopefully we'll be able to break the $36,000 mark next year in terms of average income, so just over $3,000 on average per month. We're definitely going to break the $2,000 average here for 2020 for sure. Hopefully, once we get some of these things kind of fixed up, we'll probably break close to the $28,000, $29,000 mark, and hopefully in the next couple of days, I'll be able to get this fixed up for you guys, and you'll be able to see kind of going forward. But obviously, let's hop right into specifically what dividend stocks paid me this month. And so we'll hop right off into saying BlackRock, we got 29 bucks from there. Bryn Mawr Trust, we got $96 from there. BP paid us $108 there. We also had a Johnson & Johnson payment, which was 101 bucks. It's an increase from $74 just a couple months before that. Main Street Capital is up to just under $30. We had 3M. So we had 3M in here. We sold 3M. Was about a $71 payment here, which we sold and consolidated into AbbVie and Johnson & Johnson. So expect those to go up quarter over quarter from where we were just in this third quarter here. We have O Realty. This expected to be about a $100 payment kind of going forward. It's $99.61 now. Pepsi, $102. Can't complain with that. Royal Dutch Shell, a $71 payment here. Stag Industrial, $18 payment here. Visa, $6. Wells Fargo is a $50 payment. Reinvested that as well. $14 coming from the YouTube Moolah account. BHP paid me $160 from that, and going to reinvest that bad boy as well. LYB paid me $105, just to cover call on that as well, to be able to collect another 70, 80 bucks from that. Main Street Capital again in the Roth IRA, $33 there. Johnson & Johnson and the M1 Finance account, 21 bucks. 3M and the M1 Finance account, $25. Visa, $4.74. The M1 Finance account. QYLD up to $37. I invested twice out of sync here for QYLD in the month of August and September, so expect that dividend to kind of go up pretty drastically as we go forward. ITOT, $19 there as well, coming from the M1 Finance portfolio. Southern Company up to 36 bucks. Pretty excited about that one. Hope to continue to get this one closer to 100 bucks a quarter. We'll be really excited when that kind of happens. But I've basically been investing 125 bucks twice a month into Southern Company or GM. And unfortunately, at the moment, GM is not paying a dividend, as you can see through here. So mostly just been investing in Southern Company as it's been dipping. You can see next quarter, we're expecting at about $41. That's not if I continue to invest the 125 twice a month into Southern Company. Essential Utilities got $7.24, which is an increase from last quarter, which was $6.20. Exxon, $179 payment here. We had IBM for $9.15, and I restarted my monthly contributions to IBM. So expecting $50 to go into IBM in the future, hoping that the Red Hat or cloud play there continues to pay dividends. And I think that the margins on Red Hat are really good. And so I think that as potentially we see some of the services come down and the consulting come down from IBM, it'll be more than fully offset by the cloud business of Red Hat continuing to increase in revenue, and also having that good and better margin compared to the services business. Another small investment in realty income in my computer shares account there. So it's $1.26 reinvested in that as well. Waste management, $2.90. Can't complain with that one. Some shares that I have through the company, $96 there. And then we saw a decrease in Cardone Equity Fund 5 here from $56 in the month of August to $50. So we did see a small decrease in terms of the net contributions that I get from the cash flow there. So I think that's just an adjustment of what kind of cash flow we're getting coming from that portfolio. I'll continue to keep you guys updated for this, but this was a $675 a year sort of payment that we're expecting. Now we should probably expect closer to $600 for the year going into 2021, but I'll keep you guys posted as that changes. Then we had $4.06 going into the website savings. Now, website savings is going to be impacted because of the savings rate kind of going down, or the interest rate going down in the Amex personal savings. And you can see in the personal savings as well, $6.95. And this was mostly impacted, expecting next month to be less than $1 in terms of interest, just based off the fact that I utilized that to buy some stocks in my individual brokerage account. So overall, I think I utilized that money and kind of put it to work. I thought that it probably would be best in the individual brokerage account, maybe doing cash secured puts, just based off the fact that obviously I'm not making much money on my basically money in my savings account. So I thought that if I could get 6-7% yield on my money with something that's about 95 to 96% chance of success, or 4% chance or 5% chance of being in the money, I'm looking at something pretty good where I could basically, quadruple, if not 10x the amount of interest rate that I'm getting in my personal savings account, and also be able to potentially buy some good shares at a good price if I purchase them, purchase appropriate cash secured puts. So going back to that and talking a lot about cash secured puts here, it's partially one of the reasons why my options income has gone up pretty drastically. I think that this is the first month I've really utilized cash secured puts in here. So I'll have to be transparent. I'm not doing entirely cash secured puts, but I am doing mostly cash secured puts. There is some cash in my individual brokerage account, but something like as simple as doing AT&T puts at $28. I'm more than happy to buy AT&T at $28. I'm more than happy to buy ORealty at $55. And so I just say, hey, if that happens within the next week, 2 weeks, I'll buy it. And people give me money to enter into that contract. And it's as simple as that. Basically saying, hey, I'll set aside $5,500 to be able to buy ORealty at $55 in the next week or two, and if that happens, I'll buy it. But if not, I just get to collect that premium. Good example of this as well is JP Morgan. If it dipped down to $87 by next week, I'm gonna buy it, right? I'll buy it with or without this options contract. But at the same time, who's to say that it's gonna drop to $87, right? And I have $8,700 that I'd be willing to $8,700 that I'd be willing to invest into JP Morgan. But if it's not dipping down to $87, there's no point in me buying JP Morgan. But if it does dip down to 87, I'm going to buy it. So it just doesn't make sense why you wouldn't enter into the contract to say, hey, you know what? I'll enter that agreement. I'll buy that for $8,700. No problem. $87 a share. I'll do it. if it hits that price target, but if it doesn't, you're going to owe me a little bit of money. And that's basically what I'm doing here. I'm setting aside some cash, mostly with Tesla. Sometimes 25, $30,000 worth of cash, saying, hey, if it dips down to $250, $300 a share, $325 a share, I'll buy it from you. But at that point, it's so far out of the money that most of the time it will be 4 or 5% chance of being in the money. And so I'm basically collecting these large premiums, 20-25% annualized on my money, to basically to say, hey, within the next week or two I'll be able to buy that from you if the price goes below a certain point. So there is obviously an opportunity for that to happen. Like I said, there's a 4 or 5% chance of those options kind of becoming in the money, which then I'll have to purchase. But hopefully, if you're doing your strategy correctly, those are prices at which you would want to buy that stock anyway. Like JP Morgan at 86, $87. I'm going to want to buy JP Morgan at 86, 87 bucks. That's a no-brainer. I'm going to do that anyway. So it just kind of helps to be able to set aside some money, as well as make some additional cash flow while you're waiting to pick up shares at the appropriate price. Now, of course, if you do sell that and the price does go up dramatically, the option becomes less valuable and you can buy it back and take your risk off the table. That's generally what I've been doing a lot with Tesla. It'll swing down, let's say in the high 300s one day, and it go up to the 420, 425 range the next. And I'm able to capture that delta between the two prices. I'm able to say sell something for $200, $300 one day and buy it back for 50%, 60% of the value, be able to eliminate in my entire risk and just buy back for 50% of the price, and just wait for another down day for it to kind of come down and hopefully swing back up, and utilize that volatility to be able to capture a little bit more money. So anyway, I know that this wasn't my typical video. Portfolio is still about 546,000, hoping to increase it closer to 600,000 before the end of the year if the market wants to stay in there. Of course, I'm adding my additional contributions just to give you guys some, I guess, foresight. I am moving it back into the apartment, obviously, and having to buy furniture and stuff. So with that comes a little bit of additional expenses. So there might be an impact to short-term buys in the portfolio, but hopefully once we get to the November, December timeframe, things can kind of pick back up and get back to normal. And of course, once we get into 2021, as I get a couch, get a bed frame, all that stuff, things will kind of return back to normal. You guys will be used to the additional income. But that's not to say that I'm not going to invest my $1,000 in M1 Finance twice a month, or my $375 in Fundrise twice a month, or my 125 bucks in Robinhood twice a month, and my 50, 60 bucks here and there for waste management, Clorox, as well as IBM and my computer shares accounts. Those are all fully fine, and those are kind of like my bare minimums. I'm going to do that. I'm not going to suspend any of those. But what I think I end up doing way too much is I'll end up with a couple $1,000s extra in my checking account, and I'll immediately throw it to my individual brokerage account at the end of the month, or do an additional buy in my M1 Finance account like I did in September and August for QYLD. So anyway, hope this helps you guys. Hope this kind of sees and shows you guys where I'm investing the money and where it's really starting to show up. But I'm really excited, I guess, for MO to kind of start coming through. You can see it's already 189 bucks, but I did do some big tranches of MO over the past couple of weeks. So hopefully when we get everything figured out with the tracker here, things will continue to go up, and you'll see that we should be making close to $1,500 a year in dividends coming from MO. So it is probably the biggest dividend yielder in the portfolio here. Johnson & Johnson's up there, as well as Realty Income for sure. So anyway, just wanted to give you guys a quick rundown of that. Those positions are easily 20 to 25,000. Those are the three biggest positions in the portfolio right now, are MO, and Johnson & Johnson. So keep your eyes peeled to see how those kind of perform in the upcoming months, and I will talk to you guys in the next video. Cheers.